Earnings season is just a week away, and these four stocks are showing some red flags you might want to be careful of before the report comes out. MarketBeat's Jeffrey Neal Johnson is here with that list of four stocks that are showing some signs of risk heading into Q2 earnings. Jeffrey, we're going to get into this list of these four companies, some really big names on this list too, that investors are going to want to hear about. But first, let's talk about Q1. We really have kind of recently wrapped up the first quarter of earnings in the middle of some major geopolitical economic issues right now. What's your biggest takeaway from how the first quarter of the year wrapped up for most of the market?
The first quarter of the year wrapped up for most of the market before a lot of, the geopolitical stuff started really getting kind of crazy. And I think that the previous quarter was so good that a lot of sectors, for instance, like the tech sector, has set themselves up for a price to perfection kind of scenario. You have a retail sector that is starting to slump off as people start to tighten their wallets down. And then you have this institutional de-risking that's going on in the second quarter, that you can see that institutions are starting to move their money away from speculative ventures to ones that are more fundamentally sound.
There's definitely some parts of the market showing signs of some potential risks or cracking happening heading into Q2. I know we're just a few days away from the start of the Q2 earnings reporting season, and a lot of stocks are going to be seeing a lot of volatility. While anyone looking to tighten up their portfolios or trim any of that low-hanging fruit heading into this new earnings season now has access to a new free tool. This is from our guest Louis Navalier with Investor Place. He's offering free access to his Market 360 stock grading system that can give you deep insights into any stock on the market and really help you weed out the winners from the losers. Jeffrey today is going to dive into four stocks that he has found some cracks in, but you can check the grade of any stock in your portfolio by scanning the QR code or clicking the link in the description for free access to Louis Navalier's Market 360 stock grader today. All right, Jeffrey, let's get into this list today. You have four stocks that you are waving a warning flag that there could be some bumpy roads ahead for this Q2 earnings report. What's the first stock on your list?
So the first stock on the list is going to be Nike. The brand is starting to stagnate. So their older brands, such as Converse and, the Jordan brands, those legacy brands are starting to stagnate, and they know that. So they've started to do a turnaround. So they're in the middle of this turnaround strategy that they're calling the win now strategy, right? And the CEO is trying to move back to the way they used to be in the legacy market when they went direct to consumer through digital sales and more of like a wholesale distribution model. Right now, they have so much backdated inventory piled up, so they're selling things to the consumer at a lower cost than they would normally sell the item for. And so that creates a couple of things. One, it cheapens the brand a little bit when you can buy it, at a discount store. Another thing too, it completely kills the margins on the item for the company. And so I'm kind of under the feeling that when Nike comes out with their next earnings report, that it's going to be a bit of a struggle. With this whole thing happening, you've got the heavy discounts, the heavy promotions. They're right in the middle of this transition where their legacy brands are falling off, that their new brands haven't really taken off. And then on top of it, they've got to ramp up for the Olympics that are coming up here soon as well. And so that creates this downward pressure within the company that kind of pushes the stock down. And I think that their next earnings report may not be as strong as it should be.
You can see signs of those cracks already in their chart. They've had a really rough couple of months, down almost 30% in the last 3 months. And part of that came after the earnings report that did just come out. So I want to go into earnings. I know we're talking about Q2 earnings here, but they just reported at the end of March, and they actually did fairly well. They had a beat on earnings. What in that earnings report has the market and the stock price moving lower for Nike right now?
It's a lot of the forward guidance type of issues that we're seeing across all of the earnings, because where they're in the middle of this transition from their old strategy to their new strategy, plus they're ramping up for the Olympics coming up. I think that all of that downward pressure has created a situation where even if they win in this quarter, the guidance for the next quarter is probably the reason that the stock suffered the way it did.
And Nike is a name that's really suffered a lot of volatility ever since the tariff discussion became a thing. That's the last time we really talked about Nike much on the channel, is when they were hit so hard by some of the tariff discussions and fears that happened a little over a year ago now. And so to see their stock price go back up and then all of a sudden start falling down again, it's been kind of a wild last year for Nike.
When investors saw that they actually had a plan, they started pushing the stock up. But then when their last quarter hit, their numbers were, good, but their guidance is like, hey, we're hitting this point where naturally, strategically, there's going to be a lull, right? When you take all of these things and cram them together, the timelines are going to run in such a way that there is kind of like a slack in there, right? And I think that this Q2 is going to be that slack. If you're in Nike now, right, it's not a reason to fire sale. But if you're thinking about Nike, it's a reason to kind of wait, because my anticipation is that the stock will fall lower. And if you're interested in Nike, that lower falling will find you the entry point that you're looking for.
All right, a good first name to watch on the stocks you are looking at for some cracks heading into this next quarter. What is the second stock on your list, Jeffrey?
Okay, so the next one on my list is Rivian, and it's RIVN. This is another one that I like long term, but gosh, they are suffering so bad right now. They're really struggling these days with the issues with the EV market, because they weren't doing well before the EV market started suffering. And this next quarter is going to be a road bump for them.
Been nothing but road bumps for Rivian over the last couple of years, where there's been investors who are really excited about the future of the story. It sounds like you are one of them, Jeffrey. But I think there's the other side of this where people are worried, could this be a company that we don't even know about or isn't still here a few years down the road? Is there a long-term longevity case for Rivian, or are we in the downward trend and potential endward trend of this company?
There is a longevity case for Rivian, but they have a big hole that they have to dig out of. The longevity case revolves around, for instance, the Volkswagen deal that they did just recently, where Volkswagen infused $5.8 billion into the company. But that deal was so that Volkswagen could use the R1 and the R2 platforms to build Volkswagens on, right? The simple fact is that Rivian relies on a lot of government stipends and stuff to make ends meet. At this current point, there's nobody wants to buy an $80,000-$90,000 car. So that's one problem with them. When they do actually make a sale, their unit economics dictate that they actually still take like a 60% loss. So even though they've sold a car, they're selling the car at a 60% loss. They were down 26.5% in deliveries last year, year over year. And that points towards the nobody wants to buy an $80,000 car situation, right? But then on top of it, their unit economics are still struggling with a 60% loss on every single unit sold.
The way we're talking about Rivian right now, it might seem like this stock is only in a downward trend, but really looking at the chart action on Rivian, it almost looks just volatility is the story. It's still up 30% for the year. So that's something for this company, even though it has struggled a lot as of recent. But you look at how it closed out 2025, and it was on a really nice high for the stock at that time. So what's behind some of these ups and downs that we're seeing? Why are we not only seeing a downward trend? We're seeing these random spikes that might come for Rivian.
So any type of news to the positive creates this fight between the people that are short and the people who are long or interested in going long. And that creates massive amounts of volatility. And because they are still developing so quick, with multiple plants being built, new technology being firmed out, they're constantly releasing news. And so you get a little good news, you get a spike, you get a little bad news, you get a drop. It's such a volatile market because of the sentiment surrounding this. There are a lot of people that believe this is a complete dud, and there are a lot of people that believe that this could revive the American car industry.
Yeah, absolutely some ups and downs that move on those headlines, like you said. But I want to talk about the headline this quarter specifically. This video is all about stocks that you see some cracks in heading into Q2 and some warning signs for this quarter. So why right now, especially, are you concerned for Rivian? And what are analysts saying too?
So analysts have it at a hold, right? They get over the hump of Q2. They will need to prove basically that their manufacturing costs are starting to come down, that their unit economics are starting to improve. They've got to, get their new factories up and running. They've got to get this R2 thing launched. They've got to successfully implement Volkswagen switching, their gas powered cars to electric cars on their particular platforms. So there's so much going on that it's a situation where Q2, Q3, maybe the rest of the year for them is waiting for the plants to sprout and actually take root and start growing. Right now, it's just such a struggle that I would not put my eggs in the Rivian basket right now.
Speaking of the challenges in the demand for these vehicles, that moves us on to stock number 3 on this list, which is kind of in the similar story.
Yeah, so stock number 3 is Tesla, and, it's TSLA. They're in a similar story with the EV market, right? But they're also in a similar story when you talk about the decline of the AI market because their prices in AI stock through their autopilot and all of that stuff. They also have, downward pressure because of their mega pack market, right? The 3 things that they're in primarily, the renewable energy, the electric vehicles, all of those things are being seen in a negative light, right? Nobody wants to buy an $80,000 electric vehicle, whether it's a Rivian or a Tesla. When you talk about Optimus, Optimus is like 10 years down the road. Their Optimus robot, it's 10 years down the road. It's also tied to the AI thesis. Then on the other side of that, you also have the Megapack system, which is tied to renewable energy, which is also seeing a downward turn. So you basically have this giant company doing multiple things with a shotgun effect, and there's only one thing making money, and that one thing making money is the cars. But the problem there is they made 50,000 more cars last quarter than they sold. So when you look at the big picture, they have more cars than they can sell. You've got moonshot projects like the Optimus project so far out, down the road that it's going to be forever practically before you get any money from it. You have the mega pack market falling off because of the alternative energy thesis basically falling away. So much so that last quarter, the number 2 buyer of Tesla mega packs was XAI, which is Elon Musk's own company. So when you look at all of that data across the board, you think that when Q2 comes out, if they don't hit it out of the park, I think they're going to suffer. Investors are so fleeting these days that if you miss your earnings report by even the slightest amount, they're just going to dump you and move on.
We've talked about the Optimus story being so far out that there's a lot of people investing in Tesla who are excited about that robotics angle of the company, and that is true, but it's not profitable yet. We've talked about this slump in their electric vehicle sales. That's been a story the past few quarters. That's not a new to right now. That's been around for a while. But I think the wild card I want to talk about that could be Q2 or at least Q3 this year is that SpaceX IPO. Yes, they're different companies, but Tesla is of course tied to SpaceX as well. We just talked about this on the channel too. If you haven't watched that video yet, you can watch that here too. But let's talk about, do you think that that could have any potential impact on Tesla's stock price too?
I think that it will cause the stock price to explode just because of the fandom of the Tesla stock and of, SpaceX. It's so highly pumped across the market. I think that it'd just be a huge windfall. But there's so much hemming and hawing going on over that IPO. There have been some fantastical statements made by the CEO of this company before.
Yeah, that's true. It's something that's been talked about a lot. There's a lot of excitement around it this year, but there's no guarantee on a timeline. That is for sure. One other area of Tesla to talk about before we move on is just we're talking about concerns in Q2. And I agree with you. I think whatever comes out this quarter is going to make a big difference on what happens in the stock price. They did okay this last quarter, and I don't know if that had any major impact on the stock price. Let's talk about how they did in Q1 and if that actually impacted what their stock price did this first quarter of the year.
They did okay in Q1, but the problem that I have with their Q1, and I think the problem that most investors that dig deeper than the technical aspect of it, that dig into the fundamentals, is that Tesla had to do a lot of like dancing to sell those cars. A lot of them were sold at 0% interest. A lot of them were sold through subprime lending. And so what happens when those cars start getting returned, right? Well, that's not going to be a good situation for Tesla either, especially considering they have 50,000 brand new cars just sitting around waiting to be sold.
It's an interesting conversation, and we talked a lot about the EV market with these last 2 stocks on this list. And with the EV market also comes movements in the battery market. These are different stocks we talk about a lot on this channel. If you want to see what kind of moves these stocks have have had in the last few weeks, make sure to check out this article on 5 EV and lithium battery stocks to watch in 2026. You can scan the QR code or click the link in the description to get that full report. And again, check out how the battery stocks are moving along with the electric vehicle market right now, too. Okay, Jeffrey, on to the last stock on your list. And this one is kind of the wild card. This is one that I think a lot of investors might be surprised to see on your list of stocks that you're watching for potential cracks in Q2.
So that's going to be NVIDIA. And I know I'm going to take flack in the comments for this, but I'm not a technical analyst. I'm a fundamental analyst. I look at what the company's doing and I look at what the world is doing. In NVIDIA's case, they are priced for perfection at this point, right? Their forward PE is somewhere around 21. I think their trailing PE is somewhere around 37, right? That's a very large gap. And what that creates is what's called an execution risk. NVIDIA will have to hit it out of the park. There's a lot of narrative going around about data centers not opening, data center projects being scrapped. Then you have the geopolitical tension, and specifically something that I've written about in a couple of articles, the helium shortage that's coming. You cannot make NVIDIA chips without the helium that super cools the chip making process. And there is a massive global helium shortage at this point. So in this particular quarter, if the geopolitical tension and the struggle with getting the stuff to market and the backlogs and all of the stuff that they have been struggling with, if any of that comes to fruition, then NVIDIA will suffer. And with a 21 to 37 PE ratio gap, they will probably suffer fairly significantly. As those valuation gaps start to close, it becomes an issue that is questionable. As an analyst, I'm not the only one questioning that because just recently, as in within the past 15 days, the call option ratio and the put option ratio for NVIDIA has finally flipped. The increase in put options is happening faster than the increase in call options, which means that a lot of investors are starting to see what I'm seeing and they're starting to take their bullish call options and move them over to bearish put options.
This is so interesting, and this is one of my favorite things about our channel. You will hear a wide variety of opinions and oftentimes opposing opinions on the same channel. I know you said you're probably going to get some flack in the comments. Well, if Thomas Hughes is one of the people, our Thomas Hughes is very bullish on NVIDIA, and NVIDIA just made his list of stocks to buy in April because he's so bullish on it. And I know one of the reasons he says that he is so bullish on NVIDIA is the reason why we've heard headlines, I think a few weeks ago, basically after NVIDIA's last earnings report, was that they're showing how much growth they're expecting at a company of this size. And to see what they have on those backlogs, to see the orders coming in, that there's still so much growth potential, a company that's already this massive. And so that's why Thomas shares that he's really bullish on it right now, too.
I wouldn't argue with Thomas on that. You know, in the long term, just like a lot of these other stocks, I am bullish on NVIDIA. The problem is that you have so many things coming together in the second quarter, right? Backlogs don't make money, right? Only production makes money. So it doesn't matter if they have a 20-year backlog if they can't produce the chips today. So once they sell out of chips and they can't produce any more because of the helium shortage or because of geopolitical issues or any other reason, that will create the issue for Q2. So when they come out in Q2, if they miss the mark at all, this stock will drop. When and if that situation happens in Q2, if you're an NVIDIA bull, have your money ready. Like, have it ready, because my research has shown that there is an uptick in orders across the semiconductor and chip sector, but you are starting to see the struggles in the supply chain where they are not able to produce. And that is actually being seen across, a lot of situations. Most recently, the deal with Intel and Musk, because that was done primarily to cancel out the geopolitical risks of getting chips from Taiwan or getting chips from some other country and having to have them brought in. So when you look at big players starting to hedge their bets, when you look at the flip and the put and call ratio, where more investors are starting to see what I'm seeing, it creates a situation where in the short term, like between like now and the end of the year, or maybe now and the next 2 quarters, NVIDIA might struggle. And so while I agree 100% with Thomas, I'm a AI bull through and through. Anything that has anything to do with AI, chips, semiconductors, all the time. right? But in this particular situation, Q2 is going to be a big struggle for the semiconductor sector. It's going to be a big struggle for the retail sector. And when these guys come out and they don't hit it out of the park, they'll suffer.
An interesting way to look at the potential risk that's out there, even for a super strong company. I think this is the first time I've heard the helium shortage brought up with NVIDIA being able to produce their chips. So, an interesting take. I'd love to hear what viewers think in the comments. If you want to go back and watch what Thomas had to say about his bull case for NVIDIA this quarter, make sure to watch that video here.